It's a question I like to ask all my guests, and I'll come back to this. But how do you define success?
For us, success would be having a measurable impact on the forest.
Why are you doing this? So you're from Mauritius,
Yeah.
you moved to the UK, you're running a hedge fund. Why do you care about Amazonian farmers?
I think I look at it in a more holistic approach. I mean, the Amazon is the lungs of the planet. So if I could help protect it, that is the biggest thing we can do.
Our guest today is Pajani Singah, a visionary leader with over 20 years of experience in global finance and investment. As the co-founder of Amazonia Impact Ventures, he's at the forefront of using capital as a force for good, channeling investment into the heart of the Amazon rainforest to protect biodiversity, empower local communities, and fight climate change. Through his work, Pajani is reshaping the role of finance in addressing the planet's most urgent challenges.
This is Unboxing Impact, a series of conversations with people working at the intersection of business, capital, and social change. I am Sunil Lalvani, and my work spans international business and more than a decade building a social enterprise that delivers sustainable access to clean water across rural Africa. In this series, we explore what impact really means, the trade-offs and tensions involved, and how success should be defined beyond financial return.
Pajani, welcome to Unboxing Impact.
Thank you for having me. It's a privilege to be on a
Great pleasure. And we've got a beautiful day for it in Davos.
Yeah.
In Davos. So Pajani, let's start off with a quick, and I gave that beautiful intro of you, but just tell us something again about yourself, your background, and a little bit about what you're doing today.
Yeah, sure. I mean, I grew up on a small island in Mauritius, moved to the UK 25 years ago. The grey hair is now showing. I've been working in finance. I'm a chartered accountant by background, in finance for the past 20 years. And what drove me to start Amazonia was first a few things. Like, you know, I figured out that the global capital markets still doesn't serve underprivileged communities and marginalized communities. And having grown up in Africa as such, I know that if you don't have collateral, you couldn't borrow to go and do anything. And I couldn't go to university because my parents didn't have any money to borrow for me to attend university. So I did it a different route. And I thought, why is this? And because the financial system, banking system, doesn't serve underprivileged communities. And part of the problem I was trying to fix came on my lap when I met my co-founder Aldo on a social finance course, and he was telling me, oh, well, there's a massive amount of capital that is needed in the Amazon economy, and financial institutions are still not serving these communities. That's why you have a lot of extractive, illegal deforestation, because the communities still have to live. And they're still part of the whole capitalistic system, right? They have to eat, they have to buy food, they need money. It's like, some people say, oh, indigenous people don't need money. I say, well, no, that's not true.
Yeah.
And the problem was there's no enough companies or financial services to serve these people. And we decided to create Amazonia to actually try and address this problem. For me, I was agnostic if it was in Africa, if it was in Asia, if it was in the Amazon.
Yeah.
I just wanted to do something and create something for the next 10 years, 20 years that I would want to be doing as part of my career, I guess.
Okay, and so the issue to serve them is to serve them in a way. I guess this is the dichotomy, right? Because it's either you serve them in a financially profitable way, and let's say exploit them, okay, or do it in a way that is going to be financially interesting for them and not exploitative of them.
Yeah.
But then there's going to be some give or take in terms of what financial returns are going to look like on the investment front.
Yeah.
So how do you look at that?
It's a very, very difficult balance and difficult question, because the way we've been taught economics is all about risk-adjusted return, ignore externalities, the Friedman way, and try and make a maximum profit for your investors. And today I find the rhetoric still in impact investing is, oh, you can still make returns the same way as you would in the capital markets and still have the same impact. I totally disagree with that. And I just think in order to get there, we're a long way from getting there. So you need to build an ecosystem of companies that is sustainable. Then you can actually produce constant return that compounds. Over 20 years, you might achieve the same return that you would get in 5 years if you are just a purely risk-adjusted return investor saying, I want 20% because, investing in the Amazon is very risky. And that is a balance that we need to have with investors, because investors are still, I don't want to be dressing the wolf as a lamb as such, right? And that's what's happening at the moment. A lot of people are getting on that bandwagon saying, oh, we can do impact investing, you still can make the same return. I disagree with that. But, and you know, what we are trying to do is say, no, you will make a return. You can be protected with some certain different type of instruments like collateral or blended debts, where we have philanthropic dollars or catalytic dollars that can come and help, give you protection if you're a senior investor, and you will make 5%. And that should be enough for you, because your total impact return is your financial return and your impact you have on the community.
Yeah.
If you haven't put your hand down the throat of a poor farmer for an extra 5%, then I think I can sleep well at night.
Yeah.
But if the investors say, oh no, I want 10% because of the risk-adjusted return, then this is not the type of investor. Then keep investing in the stock market.
Yeah.
And I think a lot of people would disagree with me, but hey.
Yeah.
this,
I mean, you know, I'm on the same page completely, because I think you hit a really important point. You know, from our side, it's water in African villages. For yours, it's helping South American farmers. Because you're right, when you talk about risk-adjusted returns, the perceived risk on these kind of customers, debt customers, is very, very high.
Yeah.
So I acknowledge that. But one thing I heard in the last couple of days was, you know, we have risk-adjusted return, but what about impact-adjusted return? We don't hear that. So tell me, when did you found this company?
So just before COVID, in 2020, and we made our first loan. I mean, you know, like typical entrepreneurs, we've taken risks. My co-founders and I mortgage our houses and do stuff.
So you're all in.
Yeah, we're all in, right? So if investors say we don't have skin in the game, then look at yourself properly. But yeah, it started in 2020 when I met Aldo, like I mentioned, and he was talking about, he was frustrated. He worked in the foundation world for many years, WWF, Rainforest Foundation in the UK. And he was saying, you go and build these amazing projects, and then when the funding runs out and the charities goes away, the communities go back to doing what they were doing. And he thought, that's not system change. Yeah. And the way he was talking about is impact-linked loans. And I thought, oh, wow, that's a really interesting in concept, where you incentivize the communities or the companies that you're working with. It could be private co-ops or even the buyer who's actually buying from their communities, and have direct impact-linked targets on the ground. It could be planting trees, it could be addressing more women in the co-ops, or it could be governance issues, or achieving marketing knowledge or education, and all linked to the loans. And when they achieve it, you reduce the interest rates they're paying. So hence why when I say you cannot give them 15% return, because initially you want them to get to a level where a Western company would be, right?
Yeah.
They have a barrier to scale, which is enormous. And but once they get there, they are very good, sustainable company that produces something very important that humans want, which is food. Yeah. They're all in the ag space. And it is mind-boggling that even in the UK or everywhere else, the farmers are still the poorest people on the planet, right? And that's because the system doesn't serve it. It's purely extractive in the commodities.
Exactly, yes.
And trying to address that and having a balance means there's a silent, people say, oh, you buy direct, you can make it better. So there's companies say, oh, we buy direct from farmers, but they don't provide a pre-harvest loans that they need. That is a silent cost that erodes the farmers' profits. Yeah. That is not shown. They say, oh, we've paid them a fair price, but they had to borrow at 25% locally.
Yes, I think that's really interesting, because there's so much narrative that goes around. I'm loath to use the word greenwashing, but it's that kind of thing where I'll say consumers, but other customers in the supply chain might want to do the right thing, but they're often led in the wrong direction because of, let me say, okay, maybe naive or maybe willful misinformation. And it's things like that, because if big corporates end up going direct to farmers, okay, it sounds good. You cut out the middleman, okay, but the reality is, it's not that the profits the middleman was making is now going to the farmers. No. It's just being absorbed by the big corporate, and we're still screwing the farmers or anybody who's at the bottom of the chain of the supply line. And there just has to be a fundamental rethink, which is how we started the conversation about where do profits go. And we live in this world of shareholder primacy, where the shareholder is king, and they've got to take the maximum return on the high risk capital that they so generously invest into this, and it's screw everyone else. But we have to find those, starting with a few individuals who are going to take that extra risk on, and the extra willingness to take a little bit less financial return. So how have you found those people, your initial investors, I guess, who take this message on board?
I'll tell you what, they are like unicorns. They're very hard to find, and this whole concept is investors are quite happy to put something super risky like VC.
Yes,
so climate tech is the sexy beast, right?
Yeah.
But at the end of the day, addressing livelihood is the primary, what we're trying to resolve. But they will take a blind investment approach with VC money. But when you go to the same type of kind of investors who have multiple part of their portfolio and say, but why don't you do this? They say, oh, well, my return is not as attractive. And that is a problem, right? So it's quite frustrating. But I do believe that if we carry on the same way, we will not resolve the problems the world has in the SDGs.
No,
so we
need
need capital to be really understanding, be long-term. And I think there are loads of investors out there. We just haven't found them. And I think 5 years ago when we first started, we were one of the only lenders to these companies, to these cooperatives, and still today, there's a women-only cooperative called Semkavia. We're the only lender. I mean, we're a small British company that lends to this community in the Amazon. That shouldn't be the case. But if we can prove it can be done, and they pay, and they've always paid on time, and we provide them the interest rate is transparent. The buyer benefits from this. The buyer are brokers. And I think the whole system need brokers and need everyone in the logistic. But the silent cost of that capital that they were borrowing at is enormous. And now that's suggested their margin goes up and they have a better livelihood. And when we started working with them, they were exporting 1 container and now they're doing 4 containers. So you can show that
4 times
more. And it's a good return for us. It's a very good cooperative that produces amazing coffee. This is in the coffee space. And the buyer is very happy because they know that this is a women only. Sometimes the ultimate buyer, they are bound by their shareholder returns. They are bound by their CSR and whatever. So they can't really buy direct. They need to go through a route. And that's okay. But we are here to intervene and actually help them bridge that gap. Pay a better price. You don't have to fund it. We will fund it. And that's how you start making system change.
So you in this particular case, demonstrably, you've seen this women's cooperative do much better, 4x their sales growth.
Capacity,
fantastic. And I guess they're all earning from that, and their lives are improved proportionately because of that. There's no effect on the end consumer product. I suppose arguably maybe it's a bit better. I don't know, but let's just say it's there's no negative effect on that. The impact has been absorbed by the investor. Is it correct?
Well, our investors have, I've seen the impact of their catalytic or senior debt they have. So investors in our fund invest both in catalytic, which is subordinate debt, and senior. So they have a blend, normally 50-50.
Sure.
Some can be just senior, some can be just junior. But they can see the catalytic nature of their capital has a massive impact.
No, that's what I mean. So they've taken, and I mean it in a good way. That's a great way to put it. A leap of faith to absorb some financial cost, let's say, to take slightly lower financial returns, but measurable impact at the other side, which is better for society.
It is better for society.
A whole. And I think that's been a huge part. It's just this narrative, right? Because we're driven by. Well, let me before I put words in your mouth. It's a question I like to ask all my guests, and I'll come back to this. But how do you define success?
Success. For us, success would be having a measurable impact on the forest, for example. Like we want to protect 1 million hectares and have a number of different companies in the portfolio and number of farmers and entrepreneurs that we can back. So, but we start with the BHAG of 1 million hectares. And my personal BHAG is if I can move 100 million from the global north to the global south in a conscious capitalistic model, that will be my contribution to society. And then hopefully my children can take on. It's taken me 5 years to just move 12 million. So hopefully we will get to that 100 million in 10 years' time and maybe more. But that's kind of the BHAG is.
Oh, fantastic, fantastic. Because and I think that's really, really noble. Okay, because that measure of success for you goes way beyond the self. You've talked about community, you've talked about society, you've talked about even your kids going down another generation.
Yeah.
But I think that's the point I was going to come to is, we live in this, certainly this Western capitalistic world where success is measured by individual financial gain, titles achieved at a corporate level, what consumerist materials can we show to the world? Yeah. This is how we define success today. Yeah. And that's to me that leads to so many of the problems, because if you've heard me talk about this before, but if you try, and yours is a great example. I mean, the industries you work in, you're talking about Amazonian farmers. Okay, if you're trying to maximize profit, okay, you are necessarily going to try and screw them for the best possible price you can. Yeah. Okay, and if that means giving them really low prices, fine. If that means chopping down a whole few more hectares of trees in the Amazon because they can grow more, fine. Okay, and if that means then you're going to be packaging it in all plastic materials and using, high carbon emitting fuels to transport us, fine. Because guess what? I made a better dollar at the end of the day in my return. We have to completely transform this thinking. And I think if it starts where you're talking about systems change, and that's such a great word, which is also, I think, phrase which is misunderstood as well, that we can get away from this notion that, let's maximize our profit, okay, and then let's give 1% of that in CSR to help those poor people over there. Well, they're poor in the first place because they've been exploited. Yeah. If we don't exploit them in the first place, we don't need so much philanthropy or CSR. We can do it all in one go, which is systems change. And I think you're right. Unfortunately, you said the investors you find are unicorns. They're few and far between. But how have you found in 5 years, once you've got the first one on board, the second one on board, the third one on board, how have you found traction after that?
I think that there's a lot more kind of younger generation coming into these family offices. Or a huge amount of wealth have been amassed through 200 years of colonialism and exploitative and externalities, right? And I'm finding that now a lot of these younger generations who are now taking over these family offices or investment vehicles are starting to understand that, okay, we need a balanced portfolio and we need to be investing and to do reparation. Actually, faith-based organizations, for example, are a great example. They really want to do impact-first investing and accepting lower returns. They said, we have a charitable part that we do. That's okay, but we also want to invest in endowment and make 2%, 3%, 5% on an ongoing basis. So the rhetoric is changing, but we need to talk more about it. I find that lately, SDGs have been parked away, and here in Davos as well, it's all about AI. We're not really addressing. Okay, AI is not going to resolve the world's problem, right? Tech is not. It is part of the solution, but it's not going to resolve everything. You still need capital to go to entrepreneurs, to businesses, to people in the global south. Yeah. Because the disparity is getting enormous.
Yeah. Tell me a little bit more about what you said. You want to move $100 million from the global north to the global south. Yeah. Just for me, first of all, tell me, because you also said you were agnostic about whether you're working in South America or in Africa. First of all, again, just for those who are watching, listening, who aren't familiar with these terms, just because they're broad terms, just define what you mean by those terms.
A lot of these ex-colonies are the ones who are actually still the poorest countries in the world, right? But if you want to level the playing field where they can actually trade, they can actually compete, or also have access to capital, same as a company in the global north, then we need to move blended debt or the sort of vehicle down there to actually get them to that level. At the moment, they're paying 20% or 25% interest on a loan for funding their harvests, whereas a farmer in the UK or in Europe are getting it at 10, 12%. So that's what we are trying to do. We're trying to get it to that sort of rate on the dollar or on the euro kind of loans, so that it's a parity, and then they are selling into the same market that these guys are selling. But if you move that capital, then you build ecosystem. They don't just depend on philanthropy, and you need the DFIs to do that. And they are very difficult to kind of work with. They're notoriously difficult to work with. So that needs to change, because they can be extremely catalytic. Instead of us giving aid, we can actually be investing DFI money and getting a small return as part of this whole ecosystem. But it's a tough gig, but I think it is doable. And if we could cumulatively, if we can move 100 million and 10 of us of Amazonia erupts in the whole of Europe, you've moved $1 billion, right? That's how you move capital. If you look at the time where you take electric vehicles or solar or whatever, it's heavily subsidized by governments initially. But to subsidize the pool, no one wants to do it. And they say, oh no, it's much riskier. But if you want to have food security, you need to invest where your food comes from.
I think that's a really excellent example, actually. You look in the UK at the subsidy, not in the UK, all across Europe and the US, the subsidies given to EVs, to try and do it. So when governments need to do it, it's catalytic for their interests. We've seen they can do it. We've seen it's been massive success. Right. I mean, look what's happened with EVs across Europe and the US, which only happened, of course, because the subsidies
came in play,
were provided. And that's a great example of what catalytic
capital can do.
Capital finance can do. Oh, that's a really good one. So you want to move the needle over that period. Who else is playing in this space for you? Well, no, not necessarily names, but I mean, are there other people in this, or are you?
I think increasingly, I find blended finance is becoming more and more. Convergence is a great organization.
And by blended, you mean you got normal financial investment with philanthropic capital subsidizing the return, so that the investors can effectively get a full return.
De-risking the capital, where it has very much, for $1 you invest in a catalytic tranche, you could leverage 9 senior, for example. That's how our fund works. But there are different models in different countries, in Africa, there are some which put equity, but we think, equity investment is very difficult in that space. So that is the main tool that we have. And if you kind of really deploy it in a good way, in a sustainable way, then you can really build a sustainable long-term fund, which we are trying to build. We want to be here in 20 years' time.
And just to go back, because I've got a follow-up question to this. Why are you doing this? Why do you want to help Amazonian farmers? You're from Mauritius. You moved to the UK. You're running a hedge fund. I get you want to do something with purpose, because that's what everyone wants to do. Many people want to do. Why do you care about Amazonian farmers?
Well, I think I look at it in a more holistic approach. I mean, the Amazon is the lungs of the planet. So if I could help protect it, that is the biggest thing we can do. Like, protect what we have, not try and do massive reforestation projects or whatever. Just let's start with the basics. Let's stop deforestation and illegal mining and illegal logging in areas where we can actually do that. And it's huge. And if we can set, an example. And I would like hundreds more companies like us to come into the space in these countries themselves or across the whole world to actually address the same problem across the Congo Basin, across Asia and the Indonesian forests. Remove monoculture, put endemic species back. That improves biodiversity, because that is actually going to benefit the whole society in the long run.
And that's the point I wanted actually to get to, because actually this is smart investing for everyone. This is not about finding some underprivileged community and giving them a little handout. This actually is, over the long term, self-serving,
structural,
to humanity. Actually, right? I mean, we need these farmers for food for ourselves. The way we are deforesting the whole world, it's going to come back and bite us. Bite us, I mean, in the global north or in the developed world, and that's what becomes so frustrating, because you try and put this argument to people, this is not just about being a do-gooder, this actually is going to help us, and maybe not us today, but our kids and their kids and future generations. It's necessary to do, but we also live in this short-term culture, right? Which I think is also, and this is a controversial take on this, not only in Wall Street, where you're judged by quarter-to-quarter returns, but even at government systems, where we're living in today's democracies, where every government has to think about 4-year term. If they want to drive change, and we need governments to step in also to help. A government comes into power, they spend the first year trying to figure out what they're going to do. They spend the next year maybe starting to get that done, and in year 3 they're thinking about the next election. They can't come in and say, look, this needs to be done over 20 years to make this change. There's going to be some short-term pain for people. because you can't accept short-term pain because you're going to get voted out in the next election.
And I think this is where, autocratic countries can take 20-year decisions, and in the Western world we can't, right? But for me, if you look at Latin America where we operate, it's very volatile politically. I mean, we heard yesterday the Argentinian governor getting rid of 13,000 laws to kind of get rid of bureaucracy.
Yeah.
And but I do believe in the power of private capital markets can actually also make change. If you wait for government, you might be waiting for a long time.
Yeah.
Government will come in when they see it's their own benefit, and unfortunately. But hopefully, in the UK, if you could get a decision for 10 years and both parties agree to stick to it, that will make a huge difference in society.
Yeah.
But that's not a problem I want to resolve because it's a complete waste of time. I don't want to talk to politics. So what my purpose is, I want to do what I can do.
Yeah.
And I don't care what everyone else is doing. And this is not an egoistic film for me. It's just, I've got young children. I need to set the example. If you don't walk the walk, don't go and preach to them. So because they will look at us and say, hey, what did you do? You enjoyed the good times.
Yeah.
We are saying to the baby boomers, you are lucky with the property market, right?
Yeah. And I think that's also a really important point that you touch on there is, we're both tackling problems that are vast and enormous, and if you look back and look at the size of the issues, they can become overwhelming. And the challenges that we have to face are enormous in this. But I think it's really important that we have other change makers who can take that first step and say, you can't wait for the situation to be ideal before you take a step. You've got to be pragmatic and say, look, it is what it is, okay, and it's a bit shitty, fine, but I'm going to take on the situation as it is, and I've got to move over the hurdles that exist there, rather than find excuse after excuse after excuse to not do it, not to take action. And hopefully we can lead by example. Hopefully, if we can have some success, and success then breeds success. I think that's really important to lead by example.
If you break, the problem is mind-boggling. One person, one company, Donald Trump, whoever, cannot resolve the world's problem. But if you say, okay, I'm going to tackle what I can do within my community, within my network, and move the dial for X, and then you set an example, then you just bring more people into this field. And you defined success earlier. I feel for me is, if we can move that capital, 100 million, be a high number, but also if I can provide for my family and earn a decent living from it without, getting crazy amount of money, like you can do in the financial markets, that would be success. And then that will hopefully inspire my children to go and work in that space. It shouldn't be called impact investing. It should be just investing.
Exactly, I agree.
Bottom line, but not exploitative investing.
I completely agree. I was going to say, because what we've talked about there is, a lot of entrepreneurial skills, and then we talk about a phrase, again, social entrepreneurship. And the same with, you said there shouldn't be impact investing, just investing. There shouldn't be social entrepreneurship, there should just be entrepreneurship. And I think, again, if we can convince entrepreneurs to take that different level of risk, because their mindset is set in terms of taking risk, knowing how to run organizations, knowing how to put systems in place. Because even though I run a non-profit, if you come in and you look at our operations, you'll see a functioning business. Okay. It's just our KPIs are not turnover and profit. It's how many people we've served and our uptime, etc. Because we do also need those people to take that first step and that risk. People are going to look at big, ambitious targets and say, I'm going to go for it, and I'll risk failure, and I'll be ready to sort of work 24/7 like any entrepreneur does. But just understand the rewards are going to be different than they might be in a typical capitalist situation.
And if you can build a company that has that sort of vision and purpose, I tell you what, if you compare yourself in attracting talent in the future, I can guarantee you that the new generation will be wanting to work for a company that has that sort of core purpose and value, compared to one which is purely extractive. And I think then this is where you win. You have a constant business reward for a long time. You will attract talent, you give purpose, and you're also making money for your shareholders and the people you're serving. And you will win over the purely extractive one, who could be here for 10 years competing with you, but over the longer term.
But then it is that balance about getting the capital from them to move to you, which I hope is happening. Pajani, where are you now in your journey in terms of financial situation? What you're looking for, next steps? What are your next immediate targets?
We actually, after the first 3.5, 4 years running, investing our own capital, proving the track record, this is what you have to do to actually say impact does actually work. We are on this journey now. We have a blended debt fund in that we are raising 25 million, the first vehicle. And if we get there, Bob's your uncle, we can then do this second vehicle and invest more and even expand geographical, other countries in the future. But for now, I know how hard it is. If we can get to that first 25 billion, I'll be very happy. We've raised about 5 of it so far.
Great.
And we have a few good investors who are very interested to talk to us. So that's why we're here, to try and meet investors and partners as well. Because, not in the whole ecosystem needs to come together to actually achieve this. Investors is a key part of it, but also buyers of these commodities, buyers of these non-timber forest products or bioeconomy products needs to come and open new markets in the supermarkets. Brazil nuts, acai, like these products, like superfood that come out from the forest, need to find a marketplace that is sustainable. That will be, ginger, turmeric. They are very well established product in the market. You can see ginger shops everywhere. Ginger is one of the big causes of deforestation.
Really?
Yeah, because people cut down trees and plant ginger in Peru. And this is growing part of the market. Now, ginger is not as controlled, for example, as coffee or cacao is, because these are very well-known commodity products. But there's a lot of other products that causes deforestation, passion fruit, loads of other products. So if you work in these other supply chain and you find sustainable marketplace for them, fair prices and so on, you will stop deforestation.
Okay, but then so I've learned something there. So communication and education about some of these issues is also important. I didn't know that about
ginger, turmeric. Yeah, that's why I said the whole partners, like for us, for our work to be known, like it's great that you're doing this. We need partners. We need companies to come and buy these products from the communities, and we can then provide the funding, and the investor will want to have an end marketplace, because a lot of the times people go and do the philanthropic work and create whatever industry, but there's no market for that. Artisanal products is a typical thing. Yeah. Then you go on holiday, you buy tat and you bring home, and then that's it. Whereas ginger, if you have your ginger shot every morning and you know where this is coming from, you're contributing a good thing to someone else's life, somewhere else in the world.
Wow. Okay. Pajani, it's a great pleasure to chat with you. We have a lot of talks all the time about this, but great to get you on camera for this. Tell me, just to help you, any of our listeners, how can they contact you? How can they help you, support you? What's your ask for them?
Well, they can contact us on amazoniaimpactventures.com.
amazoniaimpactventures.com, one word.
And or me on LinkedIn, Pajani Singah. And get in touch, and hopefully we can move the conversation, whichever way you can help.
Okay. Yeah. It's great what you're doing, and I wish you good luck, and I'm glad to have this conversation.
Thank you.
Cheers.